So we have a call center manager, for example. And I mean, her job every day doesn't necessarily change that much, right? I mean, how exciting it is for her to get to be on a committee that looks at, voice authentication software for the call center, for example. And I mean, maybe it's great and maybe it's not, who knows? But, she gets to participate in that and learn about something new and provide feedback on how it makes her life better as a call center supervisor.
Welcome everyone to the Credit Union Connection. I'm here today with Lone Star Credit Union CEO Becky Reed. Welcome. Very excited to have you today.
Oh, so excited to be here, Sarah. Thank you.
Thank you for being here. Yeah. So I don't know that you need much introduction, but go ahead, introduce yourself and talk a little bit about Lone Star Credit Union, what y'all are up to.
All right. So I am the CEO of Lone Star Credit Union. I'm also the co-founder and board chair for our QSO, which is called Pure IT. They are a technology infrastructure QSO. They help credit unions across the country with their networking and cybersecurity and infrastructure needs. And I'm also the board chair for NACUSO, the National Association of Credit Union Service Organizations. And I've been at Lone Star since 2014, started out as the COO, then CIO, and then CEO since 2018.
I think you had a really interesting career path too. I'm going to be sexist maybe a second here. Not a lot of women go through the technology side. You talk a little bit about that.
It's really interesting, and that's very true. There's not a lot of women in tech. I think that is changing, however. I do see the younger generation, there are quite a few women in tech, and there are places for women to get together from a technology perspective. I know I've seen women hackathons and, women developer conferences, women in technology organizations that have gotten together. So it is a little bit rare, and I think it's mostly because women tend to kind of be right-brained, right? Where that's not always true. And I certainly, in some cases, can be considered right-brained, but technology has always been something that has interested me, and it's been something that it's one of those things that in my career in both retail and in credit unions, if something needed to be fixed, I just figured out and fixed it, honestly. And so I kind of became the default desktop support person, back in the 90s. Oh, my computer's broken, call Becky. And so I've been interested in technology ever since then. And so I don't have any formal education in technology, but because I work with it every day, I've implemented software programs. I just love technology. So I kind of been the go-to technology person by default.
Yeah. I like calling it being a solutions provider, like figuring out how to solve that problem. So that's great. And I think, it's great that you're such a trailblazer for all the young women who are coming up now. Lone Star, what are you all up to? I know you do some pretty interesting things with your technology, and where you're going with it is maybe even the more interesting part. So talk a little bit about that, because it's rare for a credit union period, but also at 166 million in assets, definitely not something you expect to see. So.
Right. And I'm a big proponent of supporting small credit unions to achieve and gain economies of scale through collaboration, and using QSOs to provide that collaborative kind of middleware, so to speak. And I'm here to tell you that size really isn't a limiting factor, and there's so many things that you can do to leverage technology to help your credit union grow and gain efficiencies and things like that a lot of those credit unions on the smaller end of the spectrum may not have considered. So because of my relationship with NACUSO, I get exposed to a lot of fintechs. And I talk to a lot of fintechs that are wanting to kind of break into the credit union space. Many of them want to become QSOs, and then credit unions, on the other hand, would like to invest in these fintechs and use them, as vendors. And So what I get to do at Lone Star, which is really great, and it's not just me, our entire team at Lone Star really, really loves this as well. So we get a fintech and maybe they don't have any credit union customers, or they're just breaking into the industry, or they're looking for a core, integration partner, or they're looking for some feedback. And so what we'll do at Lone Star Credit Union is we'll say, hey, come in and we will pilot your product. We'll give you all the feedback. I will help you understand what it's like to work in the credit union space, in return for, maybe we get to use the software at a discounted price, or sometimes for free, or we get to serve as an advisor on their advisory board. There's lots of trade-offs that happen with that. But what our team gets out of that is we get to kind of play around with the latest and greatest technology. And then we get to provide feedback about how we think it should be done. And our team really, really loves that. So we have done that a lot. Yes, we invest in QSOs. Pure IT was the first one because we actually started that QSO. But since then, we get to kind of play in the sandbox with some of the new and up and coming fintechs, and lots of really cool things have come out. Our board really loves that too, because then sometimes we get to actually launch really cool technology to our members, and it gives us an opportunity to play. And failure is not a bad word, right? So we try something, and sometimes it works, sometimes it doesn't. So we just call it fail fast and pivot. So that's kind of what we've been doing the last 4 or 5 years at Lone Star, and it's a lot of fun, and it's produced a lot of interesting results.
Yeah. So talk about, because so many credit unions are concerned about experimenting at all.
Yeah.
Talk about the risk and the risk mitigation with that kind of relationship where you're testing out all these different fintechs. What are you looking for? What are you avoiding? That kind of thing when you're partnering with a fintech.
Yeah, I think that what you just have to really make sure that you're doing is, from a compliance perspective and from a risk perspective, that you're considering all of those things, right? It's really great to play in the sandbox. I mean, if it's not going to go live to the members right away, especially, then there's a lot more things that you can do once it goes live with the members. I mean, you kind of have to dot your I's and cross your T's, right? But the really cool thing is, because we get to kind of play with it pre-launch, we get to have input on things that just don't necessarily work. A lot of the fintech companies come in and they have their idea, right, of how things should be, but they're looking at it from a technology perspective, or a developer perspective, or whatever it is, the background that they came from that caused them to work for this company or start this company. And they really don't understand what it's like to run a credit union, because what you just mentioned, we do look at risk. We were heavily regulated. There's all sorts of rules that we have to comply with. And some of the fintechs may not have taken those things into consideration. And so it absolutely does take quite a bit of due diligence. Yes, we can play in the sandbox, but it doesn't mean we're taking unnecessary risks, because at the end of the day, we're just trying to help our members, and we don't want to put them at further risk. We have to do our fiduciary responsibility, and we have to do our due diligence. But as long as you do all those things, which is completely normal in the credit union space, we're used to doing that with everything, doing risk assessments and stuff like that. So it's in our wheelhouse. But just because you're using new technology and trying new technology out doesn't mean that those rules don't still apply.
Right. Yeah. And that's so cool that you get to have input very early on, like, to put it in a way, I guess, that people is a little more common. If you're buying a house that's partially built, and you get to pick the finishes, that's kind of, what y'all are doing. And so as credit unions talk about, what technologies are right for us, well, you can be part of the build of that technology to make it right for you, right?
And we love that. And our staff loves that. I mean, think about it. So we have a call center manager, for example. And I mean, her job every day doesn't necessarily change that much, right? I mean, how exciting it is for her to get to be on a committee that looks at, voice authentication software for the call center, for example. and I mean, maybe it's great and maybe it's not, who knows? But, she gets to participate in that and learn about something new and provide feedback on how it makes her life better as a call center supervisor. So our staff just absolutely loves getting involved in those things. It's a lot of fun.
Yeah, and that's great for employee retention, their own education, their own career paths. I mean, there's so many benefits to that. So, one of the things you're kind of known for, I guess, among credit unions is your interest in cryptocurrency as well as blockchain. First and foremost, because I think this is a real issue of misunderstanding in the credit union space, and a lot of spaces is relatively new. The difference between blockchain and cryptocurrency.
Absolutely. So crypto gets thrown around a lot, and it can stand for a lot of different things. Most people assume that crypto stands for cryptocurrency, and certainly it can. But crypto actually stands for cryptography. And cryptography is the underlying algorithm that encrypts the blockchain.
Right.
Okay. So cryptography encompasses the whole ecosystem. So what I prefer to say is, and when I call that ecosystem something, a lot of times I will call it crypto, and I mean that to be an all-inclusive statement, but distributed ledger technology, or DLT. And when NCUA put out its guidance a couple of years ago to credit unions to experiment and feel free to experiment on DLT, that's what they were talking about. Now, a type of distributed ledger is a blockchain, but there are actually other types. So it's kind of like the difference between Betamax and VHS, and some of your listeners may not even remember those days, but it's just, or a V8 versus a V6. It's just a different type, rear wheel drive, front wheel drive. It's just a different type of a distributed ledger technology. Blockchain specifically is where Bitcoin lives. Okay. So Bitcoin is the cryptocurrency that lives on blockchain. Again, there are other types of blockchains that aren't necessarily Bitcoin, but Bitcoin absolutely has to run on the blockchain. It can't run on any other type of distributed ledger. So that's that. Now, cryptocurrency is basically the token that rides on the distributed ledger rails. Okay. So think about blockchain being the plumbing, or being the train tracks, and cryptocurrency is riding on those rails. So that is for me anyway, that's how I kind of differentiate cryptocurrency from the crypto ecosystem at large, which all stands for cryptography.
Okay, very well. So, and I know you all are experimenting with blockchain distributed ledger. In, one of the things you mentioned at the NCUA DEI summit last year was possibly using it for wire services. And I thought it was such an interesting concept. It hadn't occurred to me. I'm not in it every day. But yeah, and you talked a lot about like the benefits. There was like so much upside to it. Just kind of talk a little bit about that.
So there is a type of cryptocurrency called a stablecoin. And of course, the DEI conference occurred prior to the whole FTX blow up. And so cryptocurrency and distributed ledger technology, and particularly crypto exchanges, right, where you buy crypto and sell and trade cryptocurrency, because of FTX, has just, it's kind of a dark cloud, right, that's been hanging over. And I think some of that dark cloud obscures the interesting things that can happen with cryptocurrency. So a stable coin is basically a cryptocurrency that will always have a value of $1. So it's
tied to hard money, like real dollars.
Very similar, right? So it's backed by $1. So, and it's stable, called a stable coin, because it retains its value. When you're talking about Bitcoin, for example, or Ethereum, those are the two most popular cryptocurrencies. They're volatile. They can change value in a second. And so what I believe is cryptocurrencies are the next iteration of payments. So it's another way to pay for things or to send money to people, with your wire example. But it doesn't make a lot of sense to, especially when you're doing a business transaction, if I agree to buy your house for $100,000 and I decide to pay you in Bitcoin, then by the time it gets to you, it can take 15 or 20 minutes to settle. And in that time, it could have lost 20% of its value, or it's worth more. So if I own Bitcoin, I'm probably like, you know what? I don't think I really want to spend it on something, because I'm losing out if it goes up. I might be doing better if it goes down, but then the person on the other side, has the opposite reaction. So it doesn't make a lot of sense to use a volatile asset to pay for something. So what most people do, and this already happens in the crypto ecosystem, is people use stablecoin to do those kinds of transactions. And what I was talking about at the DEI conference is there is a stablecoin called Rivia, where the deposits backing the stablecoin are sitting at a credit union, dollar for dollar. So that money is just sitting in a savings account backing that coin. So it's always going to just be $1. It's never going to go up and down. It's $1. So you buy it for $1. And if you want to get your fiat or your cash back, then you trade it in for $1. Always going to be $1, never more than $1. And so when you have something stable like that, now it makes a lot of sense to use it for payment. So in your example of a wire, international wires are painful for everybody involved. Now, Lone Star Credit Union doesn't do international wires, but I know from my friends who do them, right, at other financial institutions and at corporate credit unions, they do international wires a lot of time, serve as a correspondent for a credit union, their credit union customers. It's just painful. It's not instant. But I can send a crypto wallet to crypto wallet in seconds. Sarah, I could send you $10 in stablecoin, and it would be in your wallet as soon as I hit enter. You would have it. You would have it right now. Think about that. Think about if you're in Africa, or you're in the Ukraine, or you're in Colombia. And think about the power of that. Now you don't have to go to the Western Union office, and maybe you don't feel safe going to the Western Union office. Maybe you get robbed at the Western Union office, or it's not, you live in a rural area where you don't have access to a financial institution where you can go pick up your wire. So when you think about the enablement and the ability to move money, even if you're just talking P2P, or you can do B2B or whatever, when you can move money that quickly, it's a game changer, absolute game changer. And that's coming. Now, you can already do that with cryptocurrency today. I can send you Bitcoin. I could actually even send you a stable coin. Any stable coin, doesn't have to be Rivia. It can be USDC or whatever it might be. I can send it to you and you're going to have it in seconds. But once that really starts taking off, and I can use it at a merchant and I can use it other places, it kind of becomes another payment rail.
And you were saying too, I think it's a lot less expensive to do than the wire services, like you were mentioning the painfulness of them.
Oh my gosh. Yeah. What do you pay? I don't know how much an international wire costs again, because we don't do them. But you could probably pay upwards of $30, $40, $50 in some cases. And it isn't instant. And then people start talking about the security too, of course, because there's anti-money laundering laws and things that you have to do for a wire. Well, all that can be done in cryptocurrency too. It just happens with programming. It happens with automation, and it's just much less manual, but it's not any less secure or compliant.
Could in fact be more secure.
Absolutely. Yeah. Yes. Yes, because when you're talking about distributed ledger technology, right, it's transparent. And people, you can have a browser and you can go look on chain,
Right.
and you can see a wallet XYZ just got $500. You can see that. Now, you may not know who wallet XYZ is, but that's easily solvable. It is. You can find that out, who that is. So it's transparent, and that is a game changer as well.
Yeah, I've heard, use cases for like mortgage documents, stuff like that. Everybody updates them in real time. Everybody sees what everybody's doing, but only the two parties can have access, or whoever you give access to. But yeah.
Oh yeah. Yeah, smart contract. So let's talk about, and the great thing is everything I'm talking about, the technology is available to do it now. So it's not something that's like, well, when we figure it out some point in the future. No. The technology is available to do it now. It's just going to take time for industries and people to adopt this new technology, but the technology is already there. So let's talk about a car loan. So, and you talked about real estate, and absolutely that is a use case. A car loan is something credit unions do all the time, and the title work part is a nightmare. It's very manual. Even though there's electronic titles, a lot of times electronic titles don't apply, because let's say you're buying my car, right? I have a paper title, I'm going to transfer it to you, and it's just a ton of work, because literally somebody has to go to the title office with the title, with all the documents that the buyer and the seller signed, and we have to go and physically wait in line and hand it the document to a tax office person for them to do some stuff in order to send us the title, recording our lien and putting the new owners on it. I mean, talk about painful. And a lot of tax offices will only let you do like 10 at a time. So literally you have an employee who goes up there with 30 documents, right, that they've put together. I mean, sometimes you can do hundreds of car loans in a week, right? Or certainly in a month. So you go in there and okay, I have 30, so that means I'm going to give you 10, and then I'm going to go stand in line to come back and give you another 10, and then go stand. I mean, it's a crazy, crazy process.
Unreal.
Completely ripe for disruption. Right. So now, and I'm going to oversimplify this, but let's talk about distributed ledger technology between us and a dealer, for example. Say they have a used car they're selling. So now it can all be done with a smart contract with stablecoin. So a stablecoin can be a smart contract, can be wrapped around it, and the contract says, here's the buyer, here's the seller. Whenever they execute on the document, go ahead and make the title work happen. Done.
Easy peasy. Now all you gotta do is get the government going along with that.
Yeah, that's a whole nother, yeah.
The MBAs and the DMV, whatever, yes. So I'm gonna shift gears a little bit on you. You mentioned Pure IT earlier. Talk to me about that as well, because I love collaboration. I love QSOs, and they're so underutilized. So tell me.
No, I believe collaboration is our superpower, industry superpower, and I believe QSOs are the superheroes in that scenario. So Pure IT was founded by Lone Star Credit Union, because those guys, whom I knew previously, I asked them to come in and help me solve some technology problems. Now, I mentioned earlier that I don't have formal training in technology, but I understand technology to the point where I recognize symptoms. So at Lone Star Credit Union, when I got there, I recognized symptoms of an unhealthy network, but I didn't have the tools or the expertise to really dig in to figure out what was the problem. Also, Lone Star Credit Union hadn't really, and a lot of credit unions, especially smaller ones, are in this boat. Don't spend a lot of money on technology. So all of the PCs the employees were using were more than 5 years old, and they were dying. And so I was like, I want to go virtual. I want to go into the cloud, and I need somebody to help me do that. First of all, I want to make sure I can even afford to do it. And, so give me a comparison. Here's traditional, here's cloud. What can we do? So Pure IT helped us go completely into the cloud, not the public cloud. This was back in 2016. But we did create our own private cloud. And since 2016, Lone Star Credit Union has been 100% virtual, servers, desktops, everything. And that has allowed us to scale incredibly. I mean, I can spin up a server for a vendor in 5 minutes. And that's what Pure IT helped us do. So whenever they did all of that for us, I was like, guys, every credit union needs what y'all do.
Yes.
We just, we don't have the experts, and the guys at Pure IT come from other enterprise technology landscapes, healthcare, law firms, oil and gas. And so they were up to speed on the latest and greatest. And I think credit unions do a poor job sometimes of staying up to date on things that aren't in our wheelhouse, right? Technology, it's there, but we pay third-party vendors to kind of manage it for us. So we don't know what is the latest and greatest that's out there, but Pure IT does. So Lone Star Credit Union was happy to invest in them and start Pure IT, and now they help almost 150 credit unions nationwide with their network architecture and infrastructure needs. Yes.
Yeah, that is so cool just on its face, but also as far as like off balance sheet revenue for a credit union as well.
Yes, absolutely.
There's absolutely opportunities there, especially when your net interest margins are and your inflation is moving.
Yeah, and Lone Star, that was one of the things the board looked at. It knew that this was a long-term play. It knew that we were invested. Our board knew that we were investing, in something that was going to help the industry. So it was a little bit altruistic. We wanted to help other credit unions, but absolutely long-term, non-interest income revenue stream. Absolutely.
Yeah, no, and that's something I think a lot of credit unions don't necessarily consider, and they're so balance sheet sensitive or it's certainly something I think more should consider. But anyway, so what's next? What's next for Becky? What's next for Lone Star? What's next for Pure IT in the roadmap? What are y'all doing?
So we continue to partner with fintechs, and now that I am the chairman for NACUSO, it's a very exciting time because NACUSO's longtime CEO announced his retirement at the NACUSO conference a couple of months ago, and we're in the process of finding the next leader for NACUSO. And so there's some really exciting things. I think Jack has done a fabulous job, Jack Antonini, this existing CEO of NACUSO, bringing NACUSO up to this point. But just the explosion of fintechs and the kinds of partners who want to work with credit unions, I'm constantly amazed at all of the industry players that are out in the world that want to work with credit unions. I'm like, really? And they're like, we love credit unions. We want to work with credit unions. I'm like, really? Because it's kind of forest for the trees, right? I've been doing this for 25 plus years. I'm like, credit unions are cool. I love them. But to have somebody from the outside just go, oh my gosh, this is the best thing ever. I'm like, oh my, that's so cool. So, really some exciting things on the NACUSO front. For Lone Star Credit Union, we're going to continue to innovate. We're opening a new branch. We're very excited about that. Haven't opened a new branch in a couple of decades. So that's really exciting. That will happen this summer. And Pure IT just rolled out a small credit union, kind of credit union in a box offering along in collaboration with Envisant. I hope I'm pronouncing that right, of the Illinois Credit Union League. So pretty much it's credit union in a box, right? You get, if you're a smaller credit union, under 100 million in assets, you can get everything that you need and they'll help you manage it at an affordable price. And so that is something that they just came out with that I'm very, very excited about, because when we started them, we still are a small credit union. And so their focus has always been on helping small credit unions. So really excited about that.
Yeah. And there's so many small credit unions that should and could survive with just a little leg up, just a little extra oomph. But yeah, so that's great. Love to hear that. Any final words of wisdom from you, Becky?
So just because you're small doesn't mean that you can't scale. And you don't have to invest millions of dollars in order to start a CUSO or invest in a CUSO. Sometimes it can be a couple of $1,000s and you can start benefiting. There's lots of ways to use QSOs. It doesn't have to be a non-interest revenue stream. It can also be for discounted services or sharing services with other small credit unions. So if you're a small credit union, my final parting words is please consider QSOs to help your growth.
Yes, amen. All right. Thank you so much, Becky. I appreciate it.
You're welcome, Sarah. Thanks for having me.